In today's video, we're going to discuss the difference between term life insurance and permanent life insurance. Let's get after it. All right, so before we jump into the differences between term life insurance and permanent life insurance, let's see how they're similar. And how they're similar is this: as long as the policy is enforced, whether it's term or whether it's permanent, when it pays the death benefit, it pays the prescribed benefit. Your beneficiaries get no more life insurance proceeds, whether it's term or permanent. So to answer a question a lot of people have, is permanent better? Is term better? When it comes to your beneficiaries, it does not matter. You're getting whatever the death benefit is on the policy. Okay, so now that we know how they're similar, let's discuss on a broad level how I typically explain the difference between term life insurance and permanent life insurance. And here it is. Term life insurance is like renting a house. Permanent life insurance is like buying a house. So how do we go about this? With term, you're literally renting a death benefit for a specified period of time called the term. And you can have a 1-year term, which isn't really around anymore. You can have a 10-year term, a 20-year term, 30-year term. Sometimes you have companies that do a 40-year term. So you're renting that death benefit during that period of time. As with a permanent plan, as long as you pay the premium, lasts until you die or age 100 is typically how most of them are structured. So as long as you pay the premium, it's permanent. It doesn't go away, as term will go away after the term ends. All right, so we know how term and permanent plans are similar, and we know on a broad level how they're different, meaning term, you're renting a death benefit, permanent plans, you're buying. But let's dive into term life insurance, because this is the most frequently bought or purchased life insurance type that there is. So why is that? Well, to understand why it is, let's talk about how they're built. So the insurance company has all this data on people and your life expectancy, depending upon a number of factors. But they can go in and go, for this particular type of person, so let's say it's a male, 40 years old, lives in North Carolina, doesn't smoke, whatever. We know that the cost to insure this person actuarially should be, let's say, $1 per year. It's way more than that, $1 per year. And we know that 10 years from now, that same person, the cost of insurance, because it goes up every year because you're more likely to die each year you get older, 10 years from now, the cost is $10. So what we're going to do as the life insurance company is we're going to smooth those premiums out so you don't have to pay more and more each year. And we're going to, let's say, make you pay $5 a year starting at year 1 all the way through year 10, because, up front, yes, you're paying more in year 1 than you should be, but at year 10, you're paying far less. So term has a level premium for the term, and they do that by just smoothing out the premiums. So why do people buy term? Well, people buy term because from a premium standpoint, your monthly or annual premium, that is the most cost-effective way to keep your premium low. And what we find is that most of the time we want to have the most amount of death benefit to protect our family, protect our business, whatever. We want the most for the least. So we want the most amount of coverage for the least amount of premium. So the vehicle to do that in is a term policy. Now, once the term is out, it can become really expensive, which is why people will start to look for permanent life insurance, which we'll explain next. Okay, so we have a high-level overview of term life insurance. So let's talk about permanent life insurance. Now, permanent life insurance can come in a number of forms. You most of the time will hear whole life insurance, so that's a permanent plan. You could hear universal life insurance, which is also a permanent plan, but it's sort of a hybrid plan. And then you can have some index universal life policies. There's a whole lot of things other than that, but true permanent insurance is whole life insurance. In whole life insurance, it's supposed to last your whole life, which is why they call it whole life insurance. So let's talk about the pricing of whole life insurance. First, as discussed in a term, the insurance company will take year 1 what your true cost is, and then year 10 and they'll try to smooth it. Well, for a permanent whole life policy, we basically do the same thing. We start at year 1 that we're going to give you coverage, and we go all the way till the end of when the coverage would run out, let's say year 100, and we try to smooth those premiums out. Now, because it's a wider number of years, you're gonna have a lot of excess premium in the early years. And what the insurance company does is they take those funds, part of them, and they invest them, and then they guarantee you in a whole life policy a certain rate of return. So with a whole life, you have a guaranteed cash value, which means your money, or you have a non-guaranteed, which basically is based off of current assumptions. So let's say we're in a high interest rate environment. The whole life plan will perform better than in a low rate interest environment because they can get more return on their dollars. So if you just decided after 15, 20 years that you didn't need life insurance anymore, and you had a whole life plan, chances are you could go in and cash that policy in and they would give you money back. Now, depending on how the plan is structured, sometimes you can get back more money than what you've put in, so you've actually made some money on there. And that's why if you can have an argument about term versus permanent, which one is cheaper? Well, if in the later years, if you've got a well-designed permanent plan, it's actually your true net cost is better with a whole life policy because you can get money out if you need it. That's kind of how pricing works for a permanent plan. So why would someone buy a permanent plan versus a term plan? And here's the reason. Number 1, you know that you will have a need for the death benefit all the way through your life. If it's nothing other than to have a burial expense paid for by your insurance, you have that. More times though, it's because you have some estate planning needs. And then even lesser than that is you're using your whole life plan in some form of infinite banking concept, or you just want a safe place to park some cash. But that's why people buy whole life insurance or permanent life insurance. The problem is that it's hard unless you make a lot of money and have a lot of excess funds to truly take care of your full life insurance benefit need with a permanent plan versus a term plan. And honestly, that's why we always suggest getting as much permanent as you can for your budget and then offsetting that with term to kind of make up your full need. So there you have it. We've talked about how permanent and term insurance are similar. We've talked about how they're different. And again, I'll leave you with one is renting a death benefit, one is buying a death benefit, whichever camp you fall into. And then we sort of went into the differences of how term and permanent plans are priced and why you might one or the other. At the end of the day though, we don't care, your beneficiaries don't care whether or not you have a term policy or a permanent policy. The main thing is that you actually go out and get some life insurance. Until next time, we'll see you.